If all Australians knew how Australian politics is rigged to benefit big business more than anyone else, it would change the way we all voted forever. The Liberal Party tells you one thing above all else: we're responsible with money, we protect your savings. Through the 2010s, story after story broke about Australia's big banks. CBA and NAB staff caught giving customers bad financial advice that benefited the bank, not the customer. ANZ and Westpac caught up in allegations of rigging a key interest rate. A Westpac banker jailed for fraudulently lending millions to pensioners who could never repay it. Year after year, the calls grew louder for a royal commission, a full public investigation with power to put bank executives under oath. And year after year, the coalition government said no. This is the story of why. In 2015, Labor and the Greens pushed for a royal commission. The coalition voted it down. In 2016, Bill Shorten promised Labor would hold one if elected. The government still said no, insisting the banks could fix themselves. While retirees lost life savings to bad advice, while families were fraudulently signed up for loans they'd never repay, while staff were caught rigging the rate your mortgage is built on, the party built on responsible economic management told the public, trust the banks to investigate themselves. The banks tried small fixes, self-regulation, a charity donation here, a bonus review there, all designed to make a real investigation look unnecessary. It almost worked for years. By late 2017, political pressure was impossible to ignore. A royal commission motion was about to pass the Senate with Labor, the Greens, and the crossbench on board. At that exact moment, the CEOs and chairs of ANZ, CBA, NAB, and Westpac wrote directly to the Treasurer, calling a royal commission unwarranted and an unnecessary distraction. The very institutions accused of ripping off pensioners and rigging rates were personally lobbying the government not to investigate them. Not a donation this time, direct access, a letter straight to the desk of the man who controlled the decision. That's what real influence looks like. Not always cash, sometimes just a phone number the rest of us don't have. On the 1st of December 2017, Malcolm Turnbull finally announced the Royal Commission. Not because it was suddenly the right thing to do. That had been obvious for years. He announced it because saying no had finally become more costly than saying yes. When the findings came out in 2019, they confirmed everything the government had spent years denying. Banks had charged dead people advice fees. Customers signed up for products that harmed them. Boards knew about serious problems and failed to act. None of this was hidden information in 2015. It was already public. The only thing that changed wasn't the evidence. It was the politics becoming too dangerous to ignore any longer. Every retiree who lost their pension between 2015 and 2017 paid for that delay. Every family fraudulently signed up for a loan paid for it too. And every Liberal voter who believed their party protected people's hard-earned money paid a price. The discovery that responsible economic management meant protecting the bank's bottom line, not yours. Nothing illegal happened. No law was broken by that letter. No rule was bent by years of delay. The system worked precisely as it's built to work. It was a failure of leadership, not procedure. If you've voted Liberal your whole life, trusting them with the economy, ask what that trust was worth the moment 4 bank CEOs picked up the phone to the Treasurer. In Part 3, we saw Labor abandon the vulnerable. Now you have seen the Liberal Party protect the big banks. Now you've seen the Liberal Party protect the banks while pensioners lost everything. It's time to keep it real. YouTube and X at Let's Keep It Real 2026. Join the conversation and keep it real.